Good afternoon, Rachel. Good afternoon, Jill.
Hi.
How's everybody
Hello,
this
Mr.
morning,
Miller.
afternoon, day, whatever time you happen to be watching this podcast?
Doing fabulous. Thank you.
Yeah.
Awesome. Before we get very far, let's do our handy dandy disclaimer. Welcome to the Rachel and Mr. Miller podcast, where we cover real estate, real life, and the occasional topic that might raise an eyebrow. We are licensed residential commercial real estate professionals. However, this podcast is for entertainment and general information purposes. Nothing you hear should be taken as legal, financial, tax, or other professional advice. Listening does not create a client or advisory relationship of any kind. These are our opinions, our experiences, and our conversations. Enjoy responsibly, just like an adult beverage, if you choose to participate in that. I am Scott Miller, otherwise known as Miller. Rachel, I'll have you introduce our guest today, if you would be so kind.
Mr. Miller. Sure. We have Jill Mongeon. Yes.
Yes.
With us today. And Jill is owner of it's Jill Mongeon Insurance Agency representing Farmers Insurance. Did I say that correct?
That is
You
correct.
can tweak it if I didn't
Yeah.
say it quite
Yeah.
right.
You get a gold star.
Jill and I met about 2 weeks ago at a coffee and collab out here in Westlake Village, and she was really great. She came up to me to say hi. We exchanged business cards, and we've been kind of wanting to have an insurance agent on our podcast this year. And so I thought, hey, why not? Jill, you seem like you'd be the good person to bring in. So thank you for giving us your time.
Thank you. I appreciate the opportunity.
Sure.
You know, when we were talking in the green room before we went on the air, and I just thought about this as you were talking, is we talk about all the time about relationships and referrals and talking to people, and without mentioning any names of anybody to protect the guilty and or innocent. Rachel, you're telling me that Jill handed her card to another professional, and that professional said, "I'll probably never call you." And he handed the card back to her. And in my head, I'm like, why would someone do that? Well, takes all kinds to make the world go round. And perhaps that individual had never heard our podcast when we talk about being able to go out there and network. Maybe he didn't need insurance. However, maybe he knows somebody that does.
That's right.
So it just goes along with what we talk about all the time, is being able to go out and say hello, hi, how are you? And hand out a business card. They're 12 cents a piece, 2 cents a piece, 1 cent a piece, depending on what you talk about.
Say thank you
And
so
you
much.
never know.
Yeah. Right.
So yeah, it just thought about that as we were reading all that. So
Yes.
sometimes I'm a little slow on the uptake. So it is what it is. So with that, I will let you go back to what you were going to ask. And yeah, I'm good now.
Well, just to kind of tail on that a little bit, we all have our specific roles in this industry. However, our main role is to connect people. And so it's really important to know who's in your community, what those people, what they offer and what their personalities are like. Because as we start to pull in our clients as real estate agents, we might have one client that we know would relate to one type of personality and another client to relate to another. And that actually happened recently with a reverse mortgage rep that I met. So we need a lot of people in our Rolodex, and it's important to keep those connections and have them be meaningful. Jill is probably going to forever remember being on the Rachel and Mr. Miller podcast. So Jill, tell us a little bit about your background. How did you get into insurance?
That's a good question. And thank you again for having me.
Thank you.
So I was probably early on 18. I was in banking, wanted to grow. I went into a escrow company and got hired to help them in their HR department. And then I kind of grew and helped them in escrow. I mean, you're talking years ago. And then from escrow, I left and I went into high tech business to business sales. So I did that for many, many, many years. And I loved it. I love helping people. I love building relationships. It's just kind of in my nature to do that. And a friend of mine that has a farmer's insurance agency that I knew when I was in banking, literally when I was 20, 25 years old, he had his insurance agency. And 18 years ago, I thought maybe I'll do, he was like, Jill, you should do this and you'd be really good. And at the time in my life, I couldn't I mean, it's commission only. So
We know nothing about that.
yeah, right. I know, right? So
Commission only. What's that? I don't know what that means.
it was scary. So I've been with farmers since I was 20 as a client. And so the first thing I thought of, well, Mike has his agency as farmers. So I'm going to go figure out, can I get my license? Can I start a business? Here I am. I started from scratch. I'm in the Trader Joe's shopping center in Newbury Park. I've been here 17 of my 18 years. And
Oh.
I love it. It's been super fun. I love helping people.
So I heard two really extraordinary things. When you were 18, you were in banking. Like, what 18-year-old nowadays, unless they're like really, really forward thinking, is in banking? And when you say you were in banking, does that mean you were a teller?
I was a teller. Yeah. And I went to new accounts and yeah, I kind of grew within the banking. I've always
Interesting. And then the other thing that I thought was really extraordinary was at 20 years old, you said you were a farmer's insurance client. What 20-year-old has insurance? What did that? I mean, our young people could really just learn from that, because as parents, we can set our kids up with all of the advice, but they're half the time they don't listen. So I could tell my 21-year-old, get insurance. And she's going to be like, yeah, mom, whatever. What was the foundation of that for you? What brought you to that at 20 years old?
Yeah, that's a great question, Rachel, because I was married at 21 and my ex-husband, his sister, her husband was married to one of the largest insurance farmers agency in the Conejo Valley back then. So
I would love to know the name.
it's DEW, do.
Okay.
So it was a due agent, and everybody is basically, unfortunately, they've all passed away. But I didn't know anything about insurance. I mean, it was my ex-husband, my husband at the time.
So your sister-in-law's connection.
Yeah.
Okay.
Yeah.
Got it.
Yeah. So
Amazing.
yeah, it is. Yeah. And I remember so I was married at 20, divorced at 32-ish, 2 kids. They were 4 and 6 when I divorced. But I just remember when I divorced, I was like, I need to shop for insurance. And all my stuff was bundled with farmers. And when a friend of mine had shopped it, he was like, and I truly remember this. He was like, you can save a couple $100. And back then, but I was like, I don't want to mess my package up. I want everything with farmers. And knowing what I know today, I'm glad I made that decision.
Wonderful. I do know where your location is, the Trader Joe's shopping plaza that is across from the Borchard Community Center in the Newbury Park High School. So now I know I'm going to come over there and say hi to you.
Yes, please do.
Yeah. Miller, do you have something brewing in that head of yours?
I have so many questions. So many questions. This goes without saying, Jill, there's been so many changes to insurance over the last just 5 years. I mean, depends on what time and who you're talking to is what changes have taken place. Obviously, last year we had the devastating fires out there in the Conejo Valley. We've had them up here in wherever I'm at, central Northern California, which changed a lot of the insurance, the scope of insurance. And like I was reading yesterday that there are, I'm going to use the word allegedly insurance companies that are flying drones over properties just to see what's going on, and homeowners are freaking out. However, the homeowner does not own the airspace above homes, though, and homeowners and general public have a hard time understanding that you don't own the airspace. I've heard a lot of people saying that there's insurances flying drones above their homes, looking at their roofs, looking at the backyards, looking at trees without prior authorization. And then when they go to do a renewal, they're like, oh, look at this. There's a whatchamajigger on top of the hosey what's it, and making things stop. So I guess one of my big questions has the change. This is a trick question. And you can say, Scott, that's a trick question. When it comes to insurance and all of the changes that have happened, especially during the wildfires that took place, have those changes slowed down at all? Or is everything pretty much, I'm going to say, leveled out with all the changes after the wildfires? That's a loaded question.
It is a loaded question.
That was like a long-winded.
Yeah. Sorry.
I mean, during the past, I mean, I think that kind of started with the Palisades fire, then we had the Woolsey fire, the Thomas fire, then the fires all up in the mountain areas. And then our most recent, or I said the Palisades, the other one up north, that took out the whole city. Paradise. Thank you. So, and then we had the Palisades and the Eaton fires recently, and the insurance companies they've treaded back, and they're like, hold on, we're not charging enough premium to rate for all these fires. So, as you know, a lot of carriers have pulled out, they quit writing, they non-renewed, and they are, flying whatever over everybody's homes or doing Google stuff to see conditions of homes to make sure they are up to standard. The Department of Insurance has definitely, they're trying to put some rules in places that will open up the marketplace so that the insurance companies are mandated to write more in these fire areas and try and pull some of these homes out of the FAIR plan that can be written in the standard market.
I see the flare. As you know, I live up here in Ridgecrest, which is very close to Lake Isabella and Kernville, which is a mountainous area. I've had customers who want to buy homes over there. However, they can only get the FAIR plan, and then they have to get a second wraparound. And when it comes to VA, the VA is like, no, we want one policy and one policy only because we want to be able to cover our investment. There's been a number of clients that I can think of that have foregone home ownership in that area because of the California FAIR plan. And full disclosure, I'm not going to say that word anymore. I've used it too many times so far. I totally lost my train of thought.
The veterans have given up their
totally gone. Welcome to my world.
Can I step in?
Wait.
Got it? Okay.
I don't know.
Okay. All right.
California FAIR plan, because it just the flip. I was going to say is insurance is something that I know enough to be dangerous, and both Rachel and I subscribe to the plan of keep aces in their places. And when it comes to mortgages, we know enough to be dangerous, and that's not fair to our clients. Is we get asked, well, what's insurance like? I might be able to tell you what the current customer is paying, and outside of that, we need you to talk to an insurance person. And I think most realtors have an insurance person or persons in their back pocket. They say, here, call Jill, here, call Tom, call somebody, because we are not professionals in that. And like I said, I'm a very, very firm believer in keeping aces in their places. And I will say I look down like this when I see realtors talking about insurance and mortgages, is that's not their expertise. They're not licensed, and they should not talk about that because we don't know enough about it. If they do, hurrah. However, I would bet this pin that they probably don't. Did that make any sense at all?
One of the things that we do here when I'm building relationships with realtors or lenders, that we encourage you to call our office. We like the client to call so we can get because we need their full legal name and their birthday and the property address. And then we can run the property in our system to see if there's any claims on the property and to see the fire scores. So if the existing potential buyer has any claims, sometimes those pull onto the property that they're looking to buy. And sometimes there is a problem with that with some of the carriers. So
I've run into that recently, and it was the first time. So that was like a little bit of a learning experience for me.
Yeah. So, the carriers, and depending on the value of the house, they'll look back 3 or 5 years. So it's super important early on when you get a buyer, reach out to myself or your preferred insurance agency, and hopefully they'll do that for you. A lot of agencies don't build relationships like that. They really
they hand their cards back to you when you're trying to. Right?
Yeah, exactly.
Could you explain to us the California FAIR plan? At a high level.
Yeah. So the FAIR plan will actually cover the fire part, explosion. They've got a couple of other endorsements you can add on to it. One is theft and the other one is vandalism. But all in all, it's really a fire policy. So whether it's created by a forest fire, a match, or your electrical system, it's a fire. So your fair plan would cover the fire, and then the wrap, they call it, which is really a difference in conditions. We call it a DIC, and that you can purchase from one of the traditional admitted carriers, Farmers. State Farm hasn't written a policy in 3 years. There's Mercury and Bamboo, Aegis. So there's, several carriers out there that are writing the DICs, and there's certain limits within the DIC that will cover your liability. So if somebody comes on the property or off, you're off the property and you're sued, that's your liability limits. And then it covers your set and burst of a pipe, the plumbing, it can cover, your service line. They've got different endorsements. I can't think of anything off the top of my
And
head
Jill,
right now.
the separate endorsements you're referring to is the wraparound.
Correct.
You used an abbreviation. Was it DIC? Is that what you said?
Yeah, the DIC,
Okay.
which is
And
wrap.
which is the wraparound. And I have never asked this question out loud, so feel free to say, Scott, what are you doing? Hold on, what's the word? You use the word endorsed? No.
Endorse.
Was it admitted? Use the word
Oh, yeah,
admitted.
yeah, yeah.
So tell me what that means. In my head, I think I know, but I'm not sure. Explain it. Pretend I do, and explain it for everybody that doesn't know. Yeah.
So in California, the admitted carriers are your traditional Farmers, State Farm, AAA, Mercury, Travelers, Liberty, Hartford. You can go on. They are admitted and they have to abide by the California insurance rules, regulations, and guidelines. If they want rate adjustments, increases, they have to go there. They have to get permission. The non-admitted carriers don't have to abide by that. So they have their own rules and regulations. It's typically one of the biggest non-admitted carriers is Lloyd's of London. And then you have like a
Right.
company called Century or Scottsdale. There's so many of them out there.
So this is an interesting, like I said, I was kind of sure I was kind of thought I knew what it was, but it sounds like it's kind of like our industry. Rachel and I are both realtors, and we belong to the Department of Real Estate,
Mhm.
and we can call ourselves realtors. If we didn't, if we didn't, we could be called real estate agents. But we are both realtors.
Is
Or
it
did
the
I say that
Department of
backwards?
Real Estate, or is it is it the
Nation-
DRE, or is NAR? Is it NAR?
NAR.
It's NAR. Yeah.
I'm sorry. Yes, NAR.
National Association of Realtors. So yeah, we have to be part of that association to use the word realtor. If
Well,
we're
that-
not part of the association, we're real estate agents.
So that sounds kind of like what you're referring to, Jill, as admitted and non-admitted, is we have our, if you will, policies and procedures and ethics that we have to comply with.
Yeah.
So the non-admitted, kind of like that, yes, they're still insurance. Well, they're still providers of insurance. I'm not going to call them insurance companies, providers of insurance. However, they are not admitted by the state of California or recognized by the state of California. In a roundabout way, kind of.
Yeah. And then when you
Okay.
have the admitted carriers, they have the SIGA, it's the California Insurance Guaranteed Authority, which will, if the carrier goes belly up, then there's $500,000 of protection. Kind of like
It's kinda like
the
the
FDIC,
FDIC.
like the bank.
Yeah. Isn't it interesting how everything's kind of similar but different?
Yeah.
Similar but different. Same types of entities and the different.
Yeah.
While we're heading into the last 9 minutes, I want to make sure we leave some time for rapid fire. But before we do that, I want to, if I may, touch bases about the topic of HOAs. So that is a big issue. You probably know, Jill, in our area right now, is many of our HOAs are underfunded because of the fire insurance policies. The rates have gone up so much. The fact that HOAs are underfunded has a huge domino effect. So the HOAs which sometimes can be run by, the board members are not necessarily always business minded, so it doesn't always go great. But the HOAs are instilling special assessments. Property owners, whether it's HOAs for homes or townhomes or condos, they're getting hit with big bills, $2,500, $3,000 special assessment for the year. And the HOAs are just going up and up and up here. HOAs that used to be $350 are now in the upwards of $700 a month. And that really is starting to be one of the pieces of the puzzle that is pricing people out of home ownership right now. Those in townhomes were once a great place for young families and first time buyers to start. But now these HOAs are making it very, very difficult. So I'm a lot like Scott. I'm leading up to a question.
It's
So
contagious.
some people, let's put the explanation out there to help people understand that even though an HOA does have fire protection, as a property owner of a home within that HOA, you still need to have your own fire insurance. Can we speak to that? The whys of some people I've spoken to don't quite understand because they're like, well, we're paying such a high HOA because of fire insurance. Why do I have to also pay for my own fire insurance? It's like a double whammy.
Yeah, it's a great question. And you really, first, I always advise the clients, the unit owner, to refer back to the CC&Rs. So within the CC&Rs, it will say insurance in there, and it'll say, what is the unit owner responsible for? So a lot of these HOAs are really going like, they're not covering anything walls in. So drywall in, nothing. Floors, walls, ceilings, paint, cabinets, kitchen, bathroom, none of that. So the HO6, which is a condo townhome policy, would cover the walls in. So, and then it also, even if the master policy covers some of the fire, you still probably will typically need coverage for the walls in something, because if, say, your ice machine broke at night and the water line broke and flooded the kitchen, like, is your master policy for the complex going to pick that up? Maybe not. It's like usually not.
So as an agent, if I have a client that's looking to buy in a community with an HOA, it's really important for the agent to understand what the policy covers and convey that to the buyer so there's no surprises, or at least lead the buyer to the information so that they can learn for themselves.
Correct. And even as a selling realtor, because a lot of the realtors don't know, and unfortunately, like, insurance isn't your specialty. So a lot of times it isn't asked, but really when you're listing a condo, like, it really should be said, what does the buyer need? And that way, when you have buyers come to the property and speaking with the buyer's realtor, then you can share with them, hey, this is what you need to go look for. So, because then you're not like scrambling, trying to figure things out during that 5-day contingency of
would the rates, I'm gonna say like a renter's insurance type of thing, with the rates on the renter's insurance for that property or the homeowner's property, the insurance company, are they going to look at what the master insurance is? In other words, the HOA insurance, or are they going to look at it independently?
Question.
If that made any sense at all.
Are they gonna, I understand, but I'm not answering the question.
So are you saying, would the insurance carrier look at the rates of the master policy? No.
Yes. So they would be independent.
Yeah.
So if I had a condo, I'd say, hey, Jill, I want to insure my condo. And it'd basically be for the bed, the clothes, the TVs, the firearms, whatever. That's all insured in there. And typically, and I'm using that word on purpose, typically from the walls out would be the master policy.
Typically.
And this is a pigeonhole question, and say, Scott, it depends. Feel free to say that. I don't even know how to ask the question.
Scott, you're having a day.
That. Would the policy be as expensive? I can't imagine it would be, because you're just insuring for the walls in. So I can't imagine it'd be crazy expensive. And crazy expensive is up to the eyes of the beholder.
Yeah, it really depends on. So, we had talked a little bit offline about, brokers and agents helping buyers. So every single, like, if you came to me, I would really start from the beginning of saying, what's making you look for insurance? And then it's like, what's important to you? Well, I have a dog, or I have a Rolex, or I don't have anything. Okay.
The Mona Lisa.
Yeah. And, it's really important also to go, what kind of income do you have? What do you have to protect? Because a lot of people will just, get on their computer and go, here's a quote. And even for the
Right.
California Fair Plan and for the DIC, because the Fair Plan is a la carte. So whatever that agent, their knowledge and their expertise of what they put in there and what they communicate with the client, that's what you're going to get. And most consumers, 70% of consumers don't have any idea what they're getting. So I'll have clients come to me and I'll say, are you looking at other carriers? Just so I have a better idea. Like, let me help you. If what I'm offering doesn't make sense, by all means, share with me what you have, and I will be honest. And if premium is your bottom dollar, I'll go through my quote and I'll go through what you've gotten and share with you. These are the differences. And if that other carrier makes more sense and that other broker can help you, then at least I did my job and educated, because it's super important. People don't talk about liability and protecting your income and your assets. Like, do you have an umbrella policy? And
Right.
you know what I'm saying? Like personal
I
property
do.
or
Jill, we are almost at the end here. You're going to hear a bell, and I'm going to preface this with there's an asterisk on all of these questions. So they're yes, no questions, but keep in mind there's an asterisk. So that asterisk means like no with an explanation or yes with an explanation. So they're not
That's not
in
how this
concrete.
game works, Miller.
What?
We
Here
don't
we
have
go.
time for explanations. Crack this up. Okay, here we go. Am I running this? Okay,
Go.
Okay, so you're just gonna say yes or no real quick. Deductible, higher or lower? Actually, you're gonna say higher or lower. Deductible, higher or lower?
higher.
Okay. Earthquake insurance, yes or no?
If you have equity in the property,
Good, good. Is water damage usually covered?
if it's a sudden burst of a pipe, typically
Okay, good. Does credit score matter?
not in California.
Is jewelry automatically covered?
No. Well, there's
Our
certain
home-
limits, but typically
Okay.
no. I mean, up to
Okay.
2,500.
Okay. Our home office is covered.
It can be, yes.
Do security systems lower your premium?
Yes, it can.
Are dogs a factor?
Yes.
Is mold covered? Is mold remediation covered?
That would depend on the claim. But you can
That's an
also add, that would, yeah, it depends on the claim.
Okay. Okay. Can you switch insurance mid-year?
Absolutely. Yes.
Great. Last one. Does filing a claim always raise your rate?
Not
Always
always.
being the key
typically.
word.
Not always, but
Perfect.
typically.
Perfect.
Look at that.
Wonderful.
You didn't even break a sweat. We got to work on these. We got to make them harder.
No, we don't want to make our guests sweat. But Jill, how can people get a hold of you?
They can call us or text us at 805-498-8945. We're located here in Newbury Park in the Trader Joe's shopping center, around the side, not in the front. Walk in, make an appointment, call us, text us. We would love to hear from anybody and help anybody. I will even do reviews of current policies. And if it doesn't bring us business, I promise I will do the best job to educate the client, and they will go away. And I promise they will be happy.
We love
And
it.
go look
Wonderful.
at my reviews online. Like, we really, 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 really love helping our clients and doing what's best right for the client.
Jill, you have been a wealth of information. Rachel and I say this all the time. We try to cram so much in 30 minutes, but it's always action packed. So I really appreciate you taking the time today. Do you have a website or anything that you can share with us, or should we just put that in the notes?
Yeah, I really don't, but go to Instagram, go
Okay.
to Facebook, go to LinkedIn. I'm all over.
Great.
Me, my family, my kids, my staff.
Okay.
Perfect.
Perfect. Rachel, how do people get a hold of you?
People can give me a phone call at 805-813-0664. You can email me at rachel@gratishomes.com. Website is rachelmoreno.gratishomes.com. And Miller, how can people get a hold of you?
I can be reached at area code 760-264-3501, or you can find me on my website at, I forgot my website. No, I didn't. Sellingridgecrest.com
Selling Rich.
or homeswithscottkmiller.com. And that is the best way. As always, thanks for tuning in, listening. Share it with a friend as we do these shows live. And it's always a pleasure. And with that, we will bid everybody have an amazing week. We'll see you here at the same bat time, same bat channel. And Jill, don't hang up. We're going to go visit in the green room. With that, make it a great day, everybody. I'm Scott Miller with Epic Realty, Rachel there with Gratis Homes, and Jill with Jill Mongeon Insurance, who happens to be with Farmers Insurance. I'm Scott Miller. Until next time, we'll talk soon, everybody.
Bye.